Time now for the Squawk Planner. A few notable earnings reports. We're going to hear from Delta Airlines at about 6:30 and bring you an exclusive interview with CEO Ed Bastian. Also reporting this morning, Constellation Brands and Walgreens. Then at 8:30, the main event, the December employment reports. Polled forecasters expect a gain of 155,000 jobs, a step down, not steep. That would take 2 E's. From the surprising 227,000 increase in November, but roughly in line with the 4-month average. The unemployment rate expected to hold steady at 4.2%. Joining us now, Kevin Cummins, chief U.S. economist at NatWest's Markets. I haven't seen, other than the proposed deregulation maybe and some business-friendly policies, I haven't seen a lot to like overall just in recent weeks, 6 weeks, let's say. The market action, the tone from the Fed, the increased worries about sticky inflation, as well as some worries about maybe a slowdown. None of it seems great to me. Kevin, you bullish?
Well, I think we're going to see a bit of a step down in economic growth this year relative to what we saw last year. But I have to say, if you look at more recent data, they've been, continued resilience is really the message. If you look at auto sales, we're even higher. Next week, of course, we'll get an update from on the consumer retail sales for December and how the holiday shopping season, performed. And then we had pretty strong ISM surveys this week. Jobless claims are, pretty close to calendar lows last year. So I think the economic backdrop, going into 25, if anything, it's probably a little bit better. And I'm pretty optimistic on today's report. As you mentioned, job growth is expected to slow a little bit relative to what we saw in November. But, if consensus is right and 155,000 jobs are added, that's still pretty good. And the expectation is the unemployment rate is basically at full employment, a pretty stable level here.
Yeah. So at this point, where do you see where we could have a problem with inflation staying between 2.5%, 3.5%, or are we missing what could be a fairly significant slowdown in growth?
I think the worry in the near term is more on the inflation side. I mean, as you mentioned, there was a little bit of slowing in the improvement that we saw through 23 and into 24, inflation has gotten a little bit stickier over the past couple of months. I'm still pretty hopeful that it's going to continue to move down towards 2%. But, there are risks. There's tariff proposals, obviously, that'll have a new source of upward pressure on inflation that could emerge in the coming year. So we'll have to see how things work out. But I'm still hopeful that inflation continues to move lower. I mean, we've seen good productivity data. And I think a lot of the momentum of, the things that are likely to come on the housing side as far as rent prices eventually are going to start seeping through more obviously into the core inflation measures that the Fed watches pretty closely.
So you think the S&P goes up this year, Kevin, and is it the leadership the same?
Well, that's a little bit out of my purview. I'm an economist, so I don't have a necessarily a view on where the equity market's going to go. But I'm pretty optimistic more recently on growth that I think, from a fundamental standpoint, if we see, there's certainly risks, as I mentioned, on tariffs, but there's also risks, downside risks to growth on trade and immigration that could slow the economy. So we'll see. We'll have to see how things unfold. But from a fundamental perspective, the consumer seems to be in pretty healthy shape. Job formation seems to be pretty solid. As I mentioned, our forecast at NatWest is 185,000 on today's jobs report. Income formation, wages and salary growth has been running close to almost 6% nominal terms. So that's not really much slowing relative to where you were, say, for example, about a year ago. Income formation was still right around there. So consumption could hold up pretty well this year. That was the surprise last year, and it has been for a while now. So, there's nothing out of the data that we've seen in the last couple of weeks that suggests any sort of real change in overall tone in the labor market. And as long as people have jobs, it seems like they're continuing to spend at a pretty healthy clip, maybe down a little bit from where we were last year, but certainly more along the lines of where the Fed was hoping with a soft landing this year.
All right, Kevin. Very good. Thank you. We'll know more at 8:30 and check some of the things that you were looking for. Thank you.